now I'd like to turn our attention to the next segment where we talk about volatility in the market and different Tradespoon tools and technology that help us take advantage of the volatility. And I looked at volatility right before the show, and it's probably 52-week low. It seems like there is no fear in the market and nobody's hedging their portfolio. So that means that this could be a contrarian signal where if you are exposed to the market, since the market is going up, this is the time where you want to hedge your portfolio by utilizing different strategies. So Joe, what do you see in terms of volatility, and how can Tradespoon tools take advantage of that information?
Yeah, you know what, taking a look at volatility, and I know we mentioned last year to some of the viewers, taking a look at vol, and specifically we're looking at the VXX right now, it has pulled off pretty dramatically over the last couple of weeks. We did suggest potentially looking at the VIX marketplace and maybe looking at something like a VIX call spread in March. You could even go out as far as May, where you could go out and you could buy, we were saying, buying the $16 level and selling the $19 level. Now, some of you might say, well, that's crazy. I want to dispel something. That might be crazy because, the VIX is at 14. For those of you that trade VIX options, the VIX options are not tracking the cash VIX that we talk about, VIX, and they're not tracking the VXX. They're tracking the VIX futures, which a lot of you don't see. The VIX futures right now are trading right around 17. So if you're buying that 16-19 call spread that's expiring in March, we were looking at that last week, and I think it was trading right around $1.20. It's trading around $1, so that this pullback in volatility has impacted that spread. If we have a push, now we've had some jostling today, we could see some vol come in. If you start to see vol get in the 17.5, 18, 18.5 level, that spread is going to start to expand and potentially expand dramatically. We're doing that because we want to hedge our portfolio. We want to put that non-correlated asset class to work for us. We're not doing it huge, we're doing it small. And we're doing that because we don't have a lot of opportunity to sell premium against maybe some of our individual holdings, like selling calls against stock or call options. And we don't see any put diagonals or anything, or put bearish transactions. This might be a nice opportunity. And again, you're seeing with your support and resistance, your buy-sell levels, and the correlation forecasts, that this might be a nice little play for the next 17 days to just allow you to sleep a little bit at night.
Yes. Thank you, Joe, for that insight. Keep an eye on the oil prices. There is a possibility that this week or next week we are going to reach the 52-week low and retest the oil. So I think that will create volatility in the market. So thank you for your time. If you want to get access to our seasonal charts and look at some of the ETFs or stocks, please visit tradespoon.com. And Joe, thank you for your time and insight into volatility. And thank you, everybody, and we'll see you next week.